A very good afternoon, friends. I extend very warm and hearty welcome to all the participants and the learned speaker to the 82nd webinar of Q&A on recent trends and regulatory development in M&A and corporate restructuring. This program is organized by Corporate Professional as a part of its knowledge sharing initiative, which started long back when the COVID started on the 20th April 2021. Having an effective and efficient business structure is crucial to every company. Company opts the route of M&A to secure inorganic growth or segregate their unconnected business through scheme of demerger to unlock their value and secure organic growth. The acquisition trend in India has especially accelerated against the disruption created due to COVID-19 pandemic. Corporate India witnessed all-time high M&A activities in the year 2021, seeing the finalization of 85 strategic deals valued over US $75 million and surprisingly first-time buyers accounting for 80% of the volume. So you can understand that what is the size of the market. Today, we have a galaxy of experts who will deal with legislative development and updating relating to M&A, things to keep in mind while restructuring a business, current and future M&A trend in India, and regulators' expectation from corporate undertaking restructuring. During the webinar, our learned speaker will take up the participant questions already received by us in advance and the further queries which we shall receive during the webinar. Before we begin, let me just perform the pleasant duty of introducing our learned speaker. We have Mr. Ashok Kumar Singh. He is Assistant General Manager in Listing Compliance at the BSc and has extensive experience of 17 years in listing, QIP, scheme of arrangement, delisting. He is BSc, LLB and qualified CA and CS. He has also obtained a diploma in information technology and information system audit from ICI and postgraduate diploma in security law. His scheme is BSc and responsible for ensuring compliance with the securities law and other applicable law. Ashok has worked closely in the compilation of drafting of several regulations such as LODR, RIT, InvIT, NCRPS, and etc. I welcome you, Ashok. He's just joining. He was in the SEBI meeting, so he's just joining with us. Then we have our next speaker, Mr. P. Nagesh. He is designated senior advocate practicing in the area of commercial litigation before Supreme Court and national company law since 1994. He is being regularly engaged in arguing counsel for various law firm and commercial advocate to appear before the Nclt and Nclt in the matter relating to M&A and merger and amalgamation. He is also being regularly invited as speaker on various topics under Companies Act and various seminars. He has a vast experience of over 30 years in handling merger and acquisition, binding up petition, writ petition, service matter relating to various courts, including Delhi High Court. He has handled all kinds of cases before Nclt. His other forte is handling arbitration-related matter and legal cases for several autonomous institutes of Government of India. He is the Vice President of Nclt Bar Association Delhi. I welcome Nagesh for this program of your expertise. Then we have Mr. Sanjay Mal. He is a commerce graduate from Delhi University, alumni of Wharton School, Advanced Management Program, University of Pennsylvania, USA, having over the decade of rich experience across various functions of the finance. His expertise lies in corporate finance, corporate restructuring, treasury, investor relation, large deal structuring, M&A, and new ventures development, financial management, and control, risk management, and corporate governance. He has diverse exposure and strong relationship with multiple professional entities, industry and government bodies and forum, including banking, finance, fraternity, legal, accounting, and tax advisory firm, regulatory body. He has been a speaker, active speaker on various forums. He has been awarded the membership of Pathfinder Squadron and was selected into the coveted Chairman's Quality Club the highest honor of NIT, to recognize NITian who are acknowledged as the key drivers of the quality, speed, and innovation in choosing area within the organization. Also received Excellence Award for exemplary performance and significant contribution to growth and image of the NIT. I welcome Sanjay for this program. Then we have Mr. Manoj Kumar. He's a partner head of M&A, Insolvency and Transaction Advisory of Corporate Profession. He's member of M&A Council of SOCM, Insolvency Law Committee, and CCI and Company Law and Corporate Governance Committee of PSD. He has addressed numerous professional programs in SOCM, NME, CPF, ICSI, ICI, IICA, NALSA, and Jim's APJ School. He's a prolific writer and co-authored various books of Companies Act, Insolvency, and Business Valuation. He's a research-oriented and written various articles, and his quotes and comments are regularly carried by all the major dailies, e-papers, and business magazines. I welcome Manoj for this program. He is one of the experts in the company law and in the M&A aspects related to law, taxation, SEBI law, and other things. Welcome Manoj for this program. We have another speaker of Suman Kumar Jha. He is associate partner of corporate professional. He has been practicing for last 10 years in the domain of M&A and transaction advisory and regularly appearing before Nclt, and other commercial tribunal. He is a graduate from Delhi University, qualified company secretary. He specializes in dealing with different kinds of scheme of arrangement, complex corporate restructuring, issues in enabling solution and implementation of client belonging to different sectors. So welcome Suman. So friends, today's program is a very unique way we have divided. All our speakers, they are expert in this area, and they have provided the input to the clients on different aspects. We have one side regulator from stock exchange. We have a senior advocate, Mr. Nagesh. We have a CFO from the industry. We have a Manoj Kumar and Suman Kumar, who is practicing day and night on all these issues. As you are aware, that M&A is not only connected with one law, it is multiple law. It's a company law part, but if it's a listed company, then you have to follow listing law also. Then Income Tax Act, PCI Act, Stamp Duty Act, taxation aspects. All these things you have to plan when you finalizing any scheme. Now in the listed company, before 21st May 2013, there was no need to take any approval. You just file an application. You have to file in the stock exchange and file in the Nclt. Oh, that time the High Court was there. After that, SEBI has made it compulsory that you have to file application before filing in the Nclt or court if to SEBI. So now the entire game has changed for listed company. All the listed company, those who are doing this, they have to provide the first approval. They take the approval from the stock exchange and SEBI, and then they can file in court. And then Companies Act 2013 came. They started and asking various things from income tax, from various other regulator. So the entire issue has become now time consuming and cumbersome. And you remember that the M&A transaction is always connected with the time. The deal is there, you have to do faster. But by doing this, so many things has come. But simultaneously, there are so many people have misutilized also this clause, because in my opinion, in entire Companies Act is starting with no. But this is one section where you can do anything. So people have taken advantage also, and they have manipulated in so many ways. So the SEBI is realizing that they are seeing, the stock exchange realizing, they are just checking whether at the cost of the investor or minority shareholder, you're not enriching the promoter who are the decision maker. So that's why SEBI is always trying to plug these loopholes, and simultaneously so many people are doing tax planning, but sometimes under the guise of tax planning, they do the tax evasion also. So that's why income tax approval is now required, and they want to see this. PCI is also coming into picture. And whenever you are planning any restructuring, you have to see what is the cost. So the one important cost is that is stamp duty. So stamp duty is a one cumbersome process, and is a cost where you have to decide and you have to plan. So friends, today what we will discuss, we will do all these things and we will discuss with our learned speaker. I will start with Manoj Kumar. Just Manoj, very quickly, please tell us what are the recent changes which has taken place in short. Then I will request Ashok Singh, then Mr. Mal, Mr. Nagesh, that they will discuss with us that what are the issues which they face the regulator should change, and what are their advice to the client also, or the corporate also, if they want to do something quickly, what points they have to undergo. And then we'll start question answer, and we will ask the question answer from all the learned speaker. Anybody has any question, please write to us. So I will start with Manoj. Just give a brief introduction, Manoj, that what are the changes recently has taken place which are changing this game of M&A. Over to you.
Good evening, sir. Good evening, everyone. Hello, friends. So today's topic is very, very important for any corporate life. As we know that for inorganic growth, most of the companies or corporate houses are considering various aspects of M&A transactions. So M&A includes merger within the group, outside the group, or acquisition of listed or unlisted companies. So post-COVID scenario, many corporate have started this M&A activity, which were stalled for around 2 years. And so the last financial year was very heavily active year for M&A transactions. We have seen around 600 deals, M&A acquisition deals, private equity deals, purchase deals. If we talk about the listed companies, around 150 schemes of arrangements were filed with stock exchanges. Then there are 92 takeover offers which happened for listed companies. Besides these, because these are the reported transactions, besides these, there are thousands of other unlisted, closely held transactions which are not getting reflected in any of the database. So, and the value term also, it was much more, maybe around $125 billion in value terms. So you can see that the M&A transactions are happening very fast and very in volume in very large number. We have also seen in the last financial year, there are trends of other kind of internal reorganizations like consolidation of holding company and subsidiary companies. Then for succession planning issues, many of the companies were consolidated. Promoters holdings were brought in the individual name or transferred to trusts. So those type of transactions also happened. Then many of the organizations decided to split unconnected businesses to unlock the value. So one side consolidations happened for inorganic growth, other side separations also happened for unlocking the value. So all those things are governed by the M&A overall scenario. And as we know that the primary law with respect to M&A is company law under section 230 to 234, which talks about the mergers and acquisitions, and in case of any kind of company. In case of listed company, obviously there is SEBI circular and SEBI law, which gives additional responsibility. Besides that, as we know, one of the very critical aspect is the valuation. So the valuation is also governed by the company law and other laws. Then there may be in some cases, RBI involvement if NBFCs or RBI regulated entities are involved. Then in case of big size transactions, competition commission also comes into the picture. So we have seen many, then many transactions in recent year also happened under the insolvency and bankruptcy law. And that has also changed the scenario or landscape, M&A landscape of India in last 2-3 years. So if we talk about the regulatory change and aspects, there is no major change in the company law since the Companies Act came, but there has been regular changes in the SEBI law. So in recent time, around 2 years, 3 years back, SEBI has made certain special provisions with respect to listed company, making it mandatory that the post at the time of filing of the scheme, corporate must ensure that the post post-transaction shareholding structure, public holding should not go below 25%. That was very critical amendment. Then the company law made it mandatory that the valuation should happen through a registered valuer. So that was also incorporated, and now all the valuation has to happen through the registered valuer, which are basically registered with Insolvency and Bankruptcy Board of India. A very recent amendment in the SEBI law is with respect to three aspects. One is with respect to valuation, which says that the valuation must be based on the financial which is not more than 3 months old. And at the time of board meeting, when it is being considered by the board of listed company, the valuation report should not be more than 7 days old. So they have made it very watertight thing. Old financials and old structures would not work. In many of the cases, in the observation by the SEBI and stock exchanges, they are asking for even revised valuation at the time of filing of the scheme with the Nclt. Similarly, they have made one very important amendment which says that at the time of filing of the scheme with stock exchanges, uh, the company must ensure that they have no objection from at least 75% of the value of the financial creditors, basically bank, financial institutions, and debenture holders, debenture trustees. So this is one of the critical aspects. And then another amendment with respect to a small change with respect to the fractional entitlement, which was also one of the cause of dispute in many cases for small shareholders. They have decided that there has to be a specific provision in the scheme with respect to treatment of the fractional entitlement, and it has to be clearly mentioned in the scheme that in case of fractional entitlement, the same shall be disposed of, and the money is distributed to the persons who are entitled to the fractional shares. So these are the major amendment in SEBI law. Besides, IBBI is continuously making more and more stringent valuation standards. So valuation standard is also coming. Maybe there may be separate valuation regulator who will decide how to do the valuation. So these are the major changes which is governing and which is making M&A very much regulated and sometimes complicated issue. I think we can discuss in detail each of the aspects during the M&A question Q&A sessions. I think Mr. Ashok Singh ji is also there from SEBI, BSc, so he will give the practical insights from the stock exchange side. Thank you very much.
Thank you, Manoj. Thank you very much. I welcome Ashok Singh from Bombay Stock Exchange. Actually, this program we want to structure in such a manner that what are the problems the corporates are facing, we should know. Simultaneously, regulators should tell us that if we are filing as a corporate or the professional filing any scheme, why the stock exchange is rejecting, why stock exchange is taking time. There must be some reason that your application is not in the desired thing or certain information you have not filed. So I'll request Ashok Singh, please tell us in M&A when you are observing and finding, what are the reason and what message you want to give to the corporate world that they should plan so it can be smooth sailing for both the sides. Over to you, sir.
Definitely, sir. Good evening, everybody. Am I audible, sir?
Yeah.
Okay. So, background has been shared by this thing, but the little background is how this stock exchange, for listed entity, of course, I'm talking about, how stock exchanges came into the picture of approving this scheme. So, this has very quickly, only 2 minutes. This amendment in that time, it was listing agreement, was made in the listing agreement in 2003, when they introduced clause 24F in the listing agreement, which said that a stock exchange, they should file with the stock exchange for NOC. And the reason being is there was certain issues, certain cases wherein, as we all are aware, sir, that is if promoter holding is increasing beyond threshold pursuant to scheme of arrangement, it is exempted under SST regulation. So the companies were getting promoter group companies amalgamated, and that was the observation study that would have been done. And then this proportionate increase was there in the holding of the promoter, and then the scheme was used in a way which was detrimental to the interest of the public shareholder that was envisaged at that point in time, and therefore clause 24F came into the picture. there were interpretation issue with the 24F, which says that it is only filing requirement, and few says, and the stock exchange interpretation was that it is saying that you have to take NOC from the stock exchange because the filing was with respect to NOC. But that being the said, thereafter SEBI came into the picture, and then it is evolving since SEBI came into the picture. Currently, we have master circular. Few changes have been made, and but even though this being in public domain, SEBI regulation being in public domain, regulation 37 being in public domain, SEBI circular being in public domain, there are certain checks which have been provided by SEBI, and we have observed that companies are filing schemes even if they are not meeting their these bullet points, the main compliance requirements. That was the main reason for delaying those schemes. The means we cannot say we were delaying, but it was taking some time to process. So therefore, what we did, we discuss with the SEBI, and the SEBI, in the advice of SEBI, we have issued some kind of advisory. So if you see, sir, that we have uploaded on our website, we have uploaded our checklist. So along with checklist, though this is a requirement of every professional to read the SEBI circular and the other compliance requirement, but they still for their better understanding and for their sorry. So now we have uploaded, even though these are in public domain, we have uploaded 4-5 points, which if we said that if the companies are not complying, then those schemes will be returned. And these are like, as everywhere is the motto of the SEBI, is that the public shareholder of the listed company should be protected. So one of the requirement in SEBI circular is that in case of amalgamation of unlisted company with the listed company, or shares are issued to selected group of people, then the public shareholders post scheme, they should be holding minimum 25%. I'm audible, sir? I mean, is there any issue with the voice? Hello, sir, am I audible?
Yes. Ashok is
Okay.
audible.
Yeah, so that was the one issue that, and then we have seen filing of schemes wherein the public shareholdings was going down from 25% scheme, but company said that maybe we will comply with the norm later on, and this sort of things that were happening. Then the financial results, which are as per circular required to be not older than 6 months audited for unlisted company, that were being older than 6 month audited financial results, that being the issue. Thereafter, there are certain other issues which I have pointed out in the circular. New company coming for the listing, not meeting the requirements which are there in the SEBI circular. So these are the basic issues. So what we done for the everyone's easy reference purposes is that along with the scheme checklist on our website, we have uploaded these documents on the exchange website. So that is for the reference of the companies, that if you are not meeting these requirements, please don't file your scheme with the exchanges. Otherwise, that will be returned. That was one thing. Second thing is that we have a comprehensive checklist. Documents which are there in the SEBI circular that are in public domain, company has to submit those documents along with the scheme. Plus, we have for our processing purposes, we have made certain other documents that they have to file. And what we have seen from processing the scheme, our experience is that most of the time, the cases which are referred as delayed in processing are the cases wherein the first documents are not as per the requirement of SEBI circular, or even requirement of the stock exchanges, which are there in public domain, and everybody who's going to file the scheme, they know that what the expectation are from them. Second, sometime we raise query because we need certain clarification, few things are even sometimes we see mistakes in those filings, the documents and all. So we see clarification, company take time to respond to the clarification, and once they file the clarification, it's already too late. And then there is a processing required at the stock exchange level, because we scrutinize at the very senior level also. It is approved by the senior level, because we stock exchanges are under obligation to give our comments to SEBI. So since our comments are going to SEBI, it is approved by a very senior level. So these are the basic reasons. Those things being in the public domain, not followed by the company, reply to the exchange query are not given within the time by the company, are the cases where we see that there is a delay in processing. One more thing is that, like I said, many cases, companies file the scheme without providing this clause that postal ballot e-voting, approval from the public shareholders through e-voting. They don't mention anything in the scheme. When in SEBI circular says in certain condition A, B, C, D, if you are falling within this category, approval of the scheme through postal ballot, through e-voting from the public shareholder is applicable. If that thing is happening, we telling the company you are not doing this, then they have to revise the scheme. Then they file the revised scheme. They have to file a clarification that other than this revision ABCD, what they would have done, there is no other revision in the scheme. So these things which are obvious from the processing point of view, it takes time. It takes time from the company side, and then we need to follow our entire process when all the queries are solved. So these are the cases which can be avoided if companies are, upcoming with the checklist and the SEBI circular requirement. And any questions on that, we can definitely answer that.
Okay. Thank you, Ashok. I think you have given the message clear and loud that you have all the checklist, all the SOP, your internal SOPs are there. So whenever you are filing an application, you have to follow the basic principle which stock exchange are prescribing, because your all SOP is based on the SEBI's guidance. So you are giving, and when your papers are ready, then SEBI's paper are also in the line. And whenever you are not sending any paper till the time you are satisfied, the SEBI will not do anything relating to this. So I think everybody, every corporate should realize that stock exchange is a one channel which is in principally approving. It means your papers are intact, and then SEBI will do something. And you have rightly pointed out that so many people have taken advantage of this situation, and they have embraced at the cost of minority shareholder. There is a SEBI's and stock exchange role which is fulfilling. So friends, the message is loud and clear that whenever you are making a scheme, you can't make this in such a manner that it can favor minority shareholders, the majority shareholder at the cost of minority shareholder. Now the word is cost is important. You can enrich both the person, but you cannot do that. You reduce my stake and increase your stake. That is the important point. So we will ask questions from Ashok. Anybody has questions, they can write. Now come to the industry. Now Sanjay is from NIT, and he has done so many restructuring, so many planning, so many transactions. Now Sanjay, as an industry, you are aware that today what is happening, time is essence, and somebody has asked this question also. And so many approvals are there. What are your experience which you have done in various mergers and acquisition? I think since 2006, I'm attached with you, so I'm finding that every time you're doing something another. So what are your experience relating to the regulator? What message you want to give? Simultaneously, what message you want to give corporate also when they are planning to do any structuring? What important points they should take care, so their transaction should be vis-a-vis the regulator should be faster, and simultaneously the intercede, the transfer and transferring company should be faster. Over to you, Sanjay.
Thank you very much, Pawan, for the initial gracious introduction, and of course, the very relevant points which you have raised. So, as you're aware, and you have mentioned about it, that I have had the benefit of looking at many of the transactions over a period of time. At least last 2 decades, I think it has been a very active sphere or span. If you look back, I think the first transaction, which was of a large nature, where there was a divestment and a scheme of arrangement involved, it was a demerger, basically, of one of our businesses at that point in time. From there to whatever M&As and other, corporate restructurings and mergers and again demergers, what we have seen is that the regulations have evolved significantly over a period of time, and I think Manoj also touched about it on this. And what we used to see as processes which were very, very swift have become elongated, and unfortunately, in the recent time when we have seen pandemic and stuff like that, everybody is suffering from that, and that has elongated the processes further. The recent regulatory changes, whether in the Companies Act, as Pawan mentioned, 2013, thereafter the rest of the regulators coming into play, and the listing guidelines basically are also basically becoming more and more stringent, and adding processes at times are very relevant, I think, but many a times, it really adds to the time, which is of essence for any transaction of this kind. The whole fundamental, I would say, when you look at M&A transaction, it could be a spectrum of transactions right from an acquisition of an entity or acquisition of a business, basically, to augment, what you're looking at, your own businesses. So it's a, build versus buy, one of the options. The other option essentially is that you try and see that what you can garner from there, whether it is entering into new geographies or penetrating the existing customers or looking at verticals, basically. So when you are looking at all that, I think the importance and the relevance is that it is very relevant to have a shorter time span, which basically should swiftly see through the transactions completing. More so, I think, then we have transactions which are in any case require a lot of regulatory processes, which are either earlier run by high courts and then done by Nclt now. And these processes in any case have their own time schedules, basically. I have seen one of my first transaction, basically, which was at that point in time quite evolved transaction. We managed to do that within a 6 months record time in that time sphere. But as I hear today, in fact, the demergers or mergers or divestment, which are into a regulatory mode in any case, take a much longer time because of the processes which have been introduced. So some of the things, basically, I would just give you examples of what we faced or what we found challenges around, and we must have mentioned to the regulators also, and still seek kind of some benevolent views or ways around to deal with this. See, one of the transactions we were doing of a big divestment, which of course required, as Manoj mentioned, from X to Y kind of approvals. So whether it is secured creditors or shareholders or the regulatory bodies, including income tax, CCI, and stuff like that. You have many things going on, but being a listed entity and then a divestment of another listed entity, one of the biggest challenge we could see was that the regulations around the window closure and non-trading, period which you have for a listed company, it is almost like 6 to 7 months. I mean, at the least, I would say that the windows are closed for normal quarterly results or annual results or for some other, events which are happening. So there is a very limited window which is available, and that window within which you have to basically negotiate, you have to close, and you have to go ahead, besides whatever approvals are there. We faced a lot of challenge at that point in time, timing it. And this could have basically kind of moved the needles in falling off of the deal itself. So this is one thing which one should be, regulator, I would request, should be looking at, that how do we deal with this kind of a thing when a transaction is happening of such nature, which is not exactly a stock exchange sale or sale of any such kind, which is there. So this was one example I was saying. In the recent regulations in terms of the schemes of arrangements or, demerger kind of a situation, we have seen that, I think Manoj, you mentioned about it, that the NOC, which is being now sought after from the secured creditors and, institutions and debenture trustees and stuff like that. Initially, it came up with saying that within the 15 days of board approval, you should have the NOC from 100%. Then I think it was diluted to 75%, in a rightful manner. After applying thought, and the industry might have basically stated. But in spite of that, I still feel that the issue is that there is already a laid down process of Nclt conducted meetings in which the secured creditors or these financial institutions or trustees have to vote in any case. So by just having another NOC process to be added, what are we trying to achieve? I think is a question which is open. So my submission will be that we should look at this and we should have only at one window. If you are seeking NOC upfront, then maybe in consultation with Nclt, we should dispense on the process of, secured creditors meeting, and there should be a dispensation. Similarly, things around valuation, valuations are required. We understand as long as there is a disparate, I would say, change which is happening as far as the shareholdings are concerned. But there should be a very clear-cut statement stating that if it is a mirror image kind of a demerger or 1:1 kind of a, and there is no other parties or other shareholders coming into being or going away, this whole valuation thing should be dispensed of. And while we understand that there is a share entitlement ratio and other, it creates ambiguity in the minds of a new person who has not done these things earlier. And it is a lot of effort and time which basically is spent on that. There are also case-to-case basis, I think, many things which could be like overseas investments, like, under FEMA, which will be RBI approvals and other things to be taken. If you have a global operations, you have subsidiaries and entities overseas, you have invested. If there is a demerger happening, then it depends on what is the case, in which entity is it basically getting divested into. Typically in demergers, if you have a mirror image kind of a thing, you normally have entities which are newly formed or very recently done, which will not have large turnovers or operations and other kind of a thing, which would put a little bit of a difficulty on an appointed date, saying that when the investment is getting transferred, the net worth has to be reckoned also. So this is more from, I would say, for the industry to look at that if such situations arises, then RBI looks at the last audited annual report for the purpose of net worth. To be reckoned for the purpose of overseas direct investment limits or thresholds. So if you have an appointed date and your demerger is going on, how would you create a balance sheet which will have a net worth? Unless the net worth which is getting transferred in the demerger itself is also reckoned along with the investors. Similarly, there will be related party transactions, which under the Companies Act as well as under the LODR or SEBI guidelines basically needs to be looked at. And there is a great, I think, challenge which the industry or the corporates would be facing in terms of related party transaction, because between the appointed date and the effective date, which is not as it used to be, as I said, that we could do it in 6 to 9 months time. Today, we don't even know whether it takes 9 months or 12 months or 18 months kind of a process. In that, how would you deal with those two entities between the effective date to the actual listing and having shareholders who could actually vote and give the clearances? And the second is between appointed date to the effective date. How do you deal with that particular situation? So these are, I think, things which come to the to my mind, and we have faced maybe through our experiential learnings. Then there are, of course, identification of promoters, people or organizations which have stock options. How do you deal with and retain and maintain the SEBI's guidelines on ESOPs, that there should not be any, it should not be detrimental to the interest of that. So all this also is to be something which are do's and don'ts from, I would say, industry perspective. Who are getting into this should be looking at this particular aspect proactively. And before they press the buttons, basically, they have to look at all these aspects to really be ready. And of course, there is on topmost is the certificates of accountants or statutory auditors, where the splits and other things, if it is a demerger, if it is a merger, how is it going to look at it? And the pre and post net worth, which needs to be again examined and certified. So these are, I think, various things which one must keep in mind. Of course, the whole M&A sphere, as I said, is a very, it has a large ambit. I've just touched upon on the more, the schemes of arrangement kind of a thing. But M&A as a process itself is basically a large thing. I don't think so. I have much time to really continue with this, but I would just say that the industry has to be proactive. Why the regulator has increased the requirements, there has also been a lot of support from stock exchanges with having their checklist and other kind of a thing, which is being available, and they're open and accessible in that sense, is my own experience. But at the same point in time, I think you have to orchestrate uh, each one of these elements and proactively work upon them with the professionals who are there and who can help in basically revising these strategies. Thanks a lot.
Thank you, Sanjay. Thank you very much for giving insight of your experience. Now, Nagesh, my roommate, my old friend, and very surprisingly, I will hear Nagesh first time in any webinar and in any seminar. So Nagesh is a senior advocate, and Nagesh is doing M&A transactions since long. When he has started his practice, he's doing other work he's doing, but M&A he's continuously doing, and he is day and night in the Nclt, and he can understand. Nagesh, what is your view that M&A transaction, the industry people are saying, and I'm also saying it is a need of ours, that time is the essence for M&A transaction. But transactions of M&A always stuck today in Nclt and in the court. And some people are saying that the High Court work was faster than Nclt, and Nclt is now a stumbling block. So what is your view, and how you can tell the people also, professional also, those who are filing application, listed company and unlisted company, so their things, with your experience, the message should be clear that how they should prepare. Over to you, Nagesh.
Thank you, Bhavan. It's indeed after a long time, I think I'm attending a seminar where you are also there. Very rarely we see each other in this virtual platform. We always meet at your office, or you coming to my place. Having said that, see, we as advocates, we are only presenters of the scheme and the petition which has been prepared by all the think tank and the stakeholders, like the chartered accountants, the company secretaries, the advisors, and all. They present a package to us to present it to the court. So therefore, what is that we are going to the court? Basically, unlike a regular arrangement between two companies who can handle a situation at arm's length, this is one of those cases where the Companies Act since the beginning has been saying that only a court, earlier it was the High Court, now it's the Nclt, which can sanction. It's like an approval. We are getting an approval of a scheme of a merger or a scheme of a demerger or scheme of arrangement in this case. So we are going to a third party to get it approved, though we have already got an approval from the board of directors, the shareholders, etc. So what I'm saying is that you raise a very material question as far as the delay is concerned. As far as the delays are concerned, nowadays what is happening is, being a member of the Bar Association, I can tell you, after the IBC has come, there has been a shortage of the time that is being given to these mergers and the company law matters. So therefore, these issues are actually not being taken up in this right spirit. So recently we had taken up the matter with the our president of the Nclt, and who has suggested that he would be, I think in a month's time, I think, or even by the end of this month, April, he would be organizing these matters in such a way that he's going to form a dedicated company court all over again, because it was earlier there. Now a dedicated company court means we will be having one court to hear all these merger M&As and your other operational mismanagement matters. So if once that is done, I think the things can move up very fast. The delay which you are attributing right now to the courts, that should be substantially reduced. That's one thing that we are looking at, where one dedicated court can take over these matters. Now, the second question is, unfortunately, there is no standardization of the issue relating to the dispensation of the meetings and the holding of the meetings. Some courts are taking the plea unless you have 100% approval from consent from all the shareholders and the creditors, we will not dispense with the meeting. Some of them are saying, oh, if you have a big number of unsecured creditors, I would need the consent. So people are trying to tell them there are issues, we can't take it, and if you hold a meeting, then the whole process gets delayed. So these are issues which we are facing currently. But I think, as I've heard your eminent speaker speaking before me, all of them saying that yes, 75% is something which we can look at, where we get the consent from all the stakeholders, and if that could be sufficient enough to have the matter sail through the court, I think that would cut a lot of delay that is happening right now in the courts. That's where I'm looking at happening from the what should I say, from the practice point of view, because I usually I'm a presenter of the scheme in the court. That's one issue as far as the delays which you raised. The second issue which I'm looking at is, I find more and more cases coming now of scheme of arrangement. See, M&A was always there. M&A, historically, we had a lot of M&As. Now I find a lot of companies trying to be innovative. They're trying to take advantage of the provisions of Section 230 explanation, which say the scheme of arrangement includes, because it's an inclusive definition, classification of the capital. They're saying that it can include anything also. So I find some innovative schemes coming in where the courts are unable to fathom, because courts are not really trained to that. So we have to bring it to the notice of the court, sir. Even the scheme of arrangements can involve, say, for example, taking the money out of general reserves into the profit and loss account. So many things are happening. These innovatives need to be explained to the courts. I think the courts need to have some kind of a session themselves to have these kind of matters heard and decided by them. So all I'm trying to say is that merger and acquisition demergers is fine, but scheme of arrangement is where we have to be more keen in educating the bench. This is what I will be facing in the near future. So this is what the practical aspect of it. If there's anything during the question and answers, I'll be able to answer this. Okay. Thank you, Pawan.
Okay, thank you, Nagesh. Thank you very much. Now we have another practitioner who is doing this. Suman, what is your view relating to the Nclt practice? So shortly you can tell us, then I will start question answer. And friends, whatever question you have, you please send it to us. We will one by one will discuss all the aspects.
Yeah, thank you, sir. See, basically, while I am arguing before Nclt, I feel that nowadays many regulatory body are involved in the scheme of arrangement. So sometimes Nclt used to ask that is there any sectoral regulator involved? You have to file an affidavit in this regard. Whether CCI is involved or not, you have to file this affidavit in this regard. What would be the accounting treatment? Means each and everything, each and every point should be clear in the scheme of arrangement, and we should file all kind of affidavit in first motion along with first motion application. So there should not be any further delay. As Nagesh sir told that, yeah, definitely when scheme is coming, creditors objection, creditor dispensation, shareholder dispensation, there is no uniformity on it, but all these points are also very relevant. So if we will take care of all these points, then definitely we can save our 1 and 2 months easily, because just to sake of this kind of affidavit, Nclt used to give us longer date, 1 month, 2 months. So we are facing this problem.
Okay, Suman, thank you very much. Now it's the time of question answer. I will start one by one, and I will request all the learned speakers, they can give answer. I will refer to that person, but in case somebody wants to add something, we can do this. Now this question is to specifically Manoj. At time BSC payment portal does not work for the scheme of arrangement. In case, how should we pay the requisite fee? Ashok is there. Ashok, can you suggest what we should do if the portal is not working?
That actually related to operational part, but I still check. I mean, it should be working, because we say that our this IT system is very up to the date. But if somebody has faces any issues, they can coordinate with the respective person who are in charge of this. They have numbers. But basically now we encourage online filing only. The processing fees paid through the banking channel directly, not through check and DD, in order to avoid physical movement of even these instruments. That may be one of the experience, but normally it is always updated, and functioning.
Okay.
Yes.
Manoj, can you clarify the exact treatment of fractional shares arising out of the scheme of arrangement as per the master circular?
Yeah, sir. So in general, there are 2-3 practices which were being followed by many of the corporates. In some cases, it is written in the scheme that in case of fractional entitlement, the same shall be rounded off to the nearest whole number, which was one of the common practice. Another was to say that in case of fractional entitlement, each of the fractional entitlement holder would get at least one share. To make them at least continuing to be a shareholder of the company. The third practice was to give to consolidate all fractional entitlement shares at one place and liquidate those shares in the capital market, and then distribute those proceeds among the shareholders who are entitled to the fractional entitlement. So these are the 3 different practices which were being followed, and in many of the cases there was no specific provision in the scheme itself. So that now the SEBI has made it clear that you have to make the third provision. You have to consolidate the fractional entitlement and liquidate the same in the capital market. Make some trustee who will look into all these aspects and distribute the amount. It is similar to dividend warrant which is being sent. Let's say one share. If the total value of the fractional entitlement is, let's say, 100 share. Sell the shares into the market, and whatever the proceeds will come, it will be distributed to all the entitlement shareholder. Which that is the current position now.
Okay.
Sir, just a second. I want to add upon this point related to fractional entitlement. That is purely based on our experience while processing this scheme. What we have seen that, like you rightly said, there are many ways of treating with the fractional entitlement, and now SEBI has prescribed also that in case of trust you have to provide this. But normally what happens in the scheme, people write the treatment of the fractional shares. One, it will be rounded off, or it may be a trust will be created, or some other method as may be at the board, at the discussion of the board of director. So in the scheme document, there's no clarity on how the fractional shares are going to be treated. One thing. Second thing, when there is a consolidation happening, a split is happening within the scheme, the swap ratio is that which is very likely that number of fractional shares are going to be substantial, then this treatment becomes very important. So it is important that in the scheme document, whatever method they are choosing as per the prescribed this thing, they should be clear that only this method will be used. They have to make up their mind before penning it down in the scheme that the fractional treatment, this is the treatment I'm going to give. It should not be open for the discussion at a later date by the board of director and anybody, because when scheme is getting approved by the shareholder, this is their right to know what is going to happen to their fractional entitlement.
Okay. Okay.
Yeah. Right. Yes.
Yeah, Nagesh, as you, though you have given answer, but somebody is asking, as you said, the M&A is a time-sensitive transaction. Can you please shed light on the current scenario in Nclt where the matter of merger and merger is delayed for so long? I think you have given answer that Chairman President is talking. If you want to add something else.
Yes, I think the president has informed all the members of the Nclt that if there's any specific urgency, you may have to mention it. And once after mentioning it, you can get it listed on top of the board. And if it comes on top of the board, it will be taken up. So that's what they have been told. Okay.
Sanjay, recently, in the recent SOP issued by the Stock Exchange on the scheme arrangement dated 1st November 2021, it is mentioned the period under consideration for valuation other than income approach should not be older than 3 months. The board shall consider the scheme of arrangement within 7 working days of the issuance of valuation report. What will happen if the board could not consider the scheme is given period of 7 days from the date of issuance? So what your experience in this?
See, the only thing is when regulator defines something, if you don't have clarity, you have to comply. So you should plan in such a manner that you are able to basically deal with it much in advance. But you have to read through all this. If you are not read through this thing, then you can be really up for a surprise. And anything like even in NOCs, the earlier pronouncement was that in case within 15 days it is not filed, then the whole approval is null and void. You again have to go to board and take approvals. In fact, not only board, now they have added processes of audit committee in any case was there. Independent directors, report is there. You can't have all these guys lined up just for basically that this thing has not come up. And which I mentioned that are a dual kind of a layer of approval, which I'm not sure whether it is serving any purpose, why it has been introduced. And if it is to be introduced and one has to be proactive, it is okay. But then the later part should be then dispensed on.
Okay, Ashok, you have any view in this?
Sir, actually, we are talking about what is the time which is taken for the approval of the scheme, right?
Yeah.
And we have seen that the scheme, for whatsoever reason, are taking a lot of time. Now, if you consider the valuation which is used for the scheme, and that is again based on the various issues that we have faced and various complaints that we have received, that you say that I'm going to give share at XYZ valuation, but by the time I get the share and scheme is actually approved by the Nclt, a lot of things are changing in both the company, the transferor company. I'm talking about mergers for the transferor company or transferee company. So 1 year down the line, when I'm actually getting, the worth may not be the same at which I was asked or I have voted that I'm going to approve this scheme. So that was the thought process, because of which even SEBI has taken cognizance of this fact, and therefore we have to prescribe this timeline. It will do two things. One thing is that it will provide faster movement of the scheme from the company side, that latest valuation is used, so that it is not very old when we approve. A stock exchange takes some time to approve, and thereafter when the SEBI gives his comments, and thereafter when it is filed, because there are timeline of filing also, that is 6 months. So one should not be waiting for 6 months. If you are talking about reducing the timeline, one should be ready with the preparation, and moment you get the NOC, you should be ready to file with the Nclt. That was the logic behind issuing this circular. It is exchange circular, but it was issued on the advice of the SEBI, which I understand is very, very logical also. So that even recent valuation is used when we are approving, SEBI is approving, and in the process exchange is approving, Nclt is approving. And plus, again, on talking on the timeline, we are again working, stock exchanges along with SEBI are working to reduce further timeline for the processing of the scheme that take place in the taking stock exchanges and SEBI together, so that operational efficiency come from here. Nclt and that part, our friends are already sharing that how improvement is going to happen. The entire idea is that it should be approved within the minimum number period of time, and so the latest thing are there, and the valuation, everything does not go for a change when we are actually getting the shares of the company through the scheme.
Okay, Suman, the scheme of arrangement amalgamation under section 2233 Fast Track. Now they have added 2 or more startup companies, or 1 or more startup company with 1 or more small companies. Have you finding this particular scheme or this particular law is useful for startup?
So basically, some client has also approached us for this kind of scheme of arrangement. So if the company fall within the definition of a small company or wholly owned subsidiary company, then definitely they may file before regional director under 233. But there is no specific definition for a startup. So it depends upon Nclt, and generally it is presumed that yet if it is the startup, then definitely it will fall within a small company definition. So it will be allowed by regional director.
Okay. Manoj, the change in threshold of a small company from 2 crore and 20 crore will change anything?
Sir, yes, the intent is that many more and more companies should be covered under the fast track route, which government has provided under the New Companies Act, so that the burden of the court Nclt is reduced, and where the matter is very simple, like wholly owned subsidiary and holding company, or a small company where the public interest is not involved, the merger should happen with the regulatory approval at the regional director MCA level. So the purpose is obviously to reduce the number of company which is going to NCLT. NCLT should consider only complex matters where public interest or larger number of stakeholders are there. So that is the intent, and I think it will get benefited slowly.
Okay. Nagesh, can an entity not being a company be merged with the company under Companies Act 2030? You have to unmute yourself, Nagesh.
What I'm trying to say is that the transferee companies are mentioned, one, whether it can be a company or not. See, but these days, I would rather emphasize on the scheme of arrangement between a company and its shareholders to include a compromise also with any other entity other than a company also. If that is the case, we are trying to tell the court, why shouldn't an arrangement be there between a company and its shareholders in respect of a case where the shareholders say that, sir, we want to merge the firm or a corporation or an LLP, etc., to itself. See, vice versa. We have company specifically mentioned under Section 230, but whether we can go forward along with this is also something still we have not explored. We are moving in that direction, and shortly we should be getting some clarity from the court.
Okay. Okay. So Manoj, our registered office of all the companies are situated in Delhi, but factory and other functional unit in Haryana. So we have to pay stamp duty in Delhi or as well as Haryana?
Yes. So stamp duty is a state subject, and each state, many of the states have a specific legislation, a specific entry in the stamp law with respect to stamp duty. Like in Haryana, it is specifically mentioned that in case of any transfer of property pursuant to a scheme of arrangement, there will be a special rate of duty of 1.5% on the value or consideration of the immovable property is involved. In case there is no immovable property, then the stamp duty liability in Haryana is nil. Whereas in case of Delhi, there is no specific entry in the stamp law, and it is based on the judgments, more particularly the Delhi Towers judgment, which governs the stamp duty liability in Delhi. And as per that, the stamp duty has to be paid on consideration at the rate of 3% in case the registered office of the company is situated in Delhi. So if factories are in Haryana and a company registered office is in Delhi, then obviously 3% duty is payable in Delhi, and the value of immovable property based consideration need to be paid in Haryana also. So double duty will be applicable.
Okay. Okay. Sanjay, whether the company are required to disclose all the pending proceeding against them to the Nclt as per Section 233 of Companies Act. So, as a corporate, the pending proceedings word is clear to you, or it has a confusion when you are filing your scheme?
So, in case this is more regarding the transferee company rather than the transferor company. So, to that extent, of course, there are very limited areas for us, at least, to have looked at it. But nonetheless, there is a non-clarity, and maybe Nagesh would be able to help us on, what does it mean that the pending proceeding. So we haven't. I mean, we had fortunate that we don't have such this thing, so we are not having that situation to deal with. But I think there is a non-clarity on that particular aspect.
Nagesh,
what would
you suggest something?
Can you repeat it, Pavan? I was just looking at something else when the
companies are required to disclose all the pending proceeding against them to Nclt as per Section 232, or it is only material proceedings or investigation. What is because the word is pending proceeding. Just maybe some notice has come, it is also pending. Some investigation is going on, that is also pending. So if something is going on and after result is 0, but if somebody is doing investigation and inspection, it can go against the company and maybe stock exchange and say we may refuse and Nclt can refuse.
No, earlier, if I remember correctly, we were only looking at any investigations against the company. For example, somebody is having a investigation under what is that section under companies at 213 or one of those investigations. Those were being reported. We were not reporting any and all other issues pending against the company. I don't think so. We need to say, if that is the case, then there are so many cases pending against the company. Say, for example, there will be income tax, there will be some writ petitions pending against, some land acquisition could be pending. The proceedings are limited. In my opinion, we've never given all the proceedings. We have only limited to any investigation happening against the company so far. I don't think we need to expand it.
Sir, I think, yes, we have been doing the same. Only Companies Act related inspection investigation were being reported earlier, and undertaking was given regarding the same. However, recently, many of the court NCLT benches have started asking for other investigation and proceedings pending. So it has created problem. Now, recently, the Nclt judgment with respect to, I think, Ericsson, right? In this case, it has clarified that only material proceedings need to be disclosed, not all the proceedings.
See, to add to what you said, the reason why they've used the word material is since if there are proceedings pending against both the companies, the stakeholders, the shareholders and creditors, if at all a meeting is being held, they need to know what is happening against the proceedings. So then they can take a conscious decision at the meeting whether to merge or not to merge. And they can see, otherwise they will be not without any information. That is the reason material word is used, not necessary, which has a bearing on the scheme. That is important. Right. Yeah.
Okay. Ashok, if the secured creditor give their consent at the stage of obtaining NOC from the stock exchange, whether consent of them is required again at the time of filing an application to NCLT?
Giving their NOC, which is SEBI requirement to a stock exchange, I think that is purely SEBI and stock exchange perspective. From NCLT perspective, I think that is as per the NCLT order, whatever they approach, I think legal person can answer this better. Because this will, I don't think that will, my understanding is this will not suffice their compliance requirement under NCLT provisions. And they have to get this order from the NCLT for waiver of this thing, whatever the process followed at the court.
Okay. Right. So, yeah. I think, sir, yes, the SEBI requirement has come recently, and for that, obviously, the corporate are approaching financial lenders and getting their no objection. Generally, these no objections are coming in the form of letterhead, plain simple letterhead, no objection. But for NCLT, as per the company law, all no objection has to be in the form of affidavit, which is very difficult to get from banks and financial institutions. So those NOCs would not work, and hence the meeting of creditors would happen as per the NCLT order, and in which obviously the approval of the 75% in value and simple majority number would be required. Those simple NOC letters would not work here.
Okay. Nagesh, in case of, I think there's one question relating to NCLT. Does section 230 provides for conversion of equity share into preference share capital also?
You're talking about the scheme?
Does section 230 provides for the conversion of equity share capital into preference share capital also? Equity to preference. Preference to equity is there, equity to preference we can convert?
You're talking about what? Where is the word classification used? Reorganization.
No, not conversion. I'm saying we have issued equity share capital. Now we want to convert equity share capital into preference share capital.
As a part of the scheme, isn't it?
Yeah.
Yeah. Yes, you can.
Okay. Manoj, does section 235 of Companies Act give authority to statutory authorities to attend the meeting of the shareholders, creditors? Can they put any objection in the meeting?
No, sir. There is. The section 230 subsection 5 simply saying that notice of the meeting of shareholder, notice of the meetings will be served upon these authorities. Obviously, there is no voting right provided under the law to the regulators. They have to put their objection or no objection before NCLT only at the time of their hearing, not before the chairman appointed by the NCLT. So their presence is not required. Even if they want to come, they would not have any right to vote.
Okay. I have few questions relating to valuation. And in the meantime, one person has given one suggestion that it would be ideal to have all the mergers and other form of corporate restructuring to come before regional director in place of NCLT. NCLT generally relies on the affidavit filed by RD and OL. Very rare case are there objection that to in listed entity. In view of this fact, in case of listed company, the sector regulator already given the note. I personally feel the RD will be the appropriate authority, and anyone aggrieved may approach NCLT on facts of law. This will give a lot of relief to the bench to hear IBC matter and other. This will also facilitate the cases of ease of doing business for corporate who decide on restructuring, which sometimes takes years before the bench. What is your call, Nagesh, as a judicial person?
No, historically, as I was saying, even if you see a reduction of share capital and compromise and arrangements, 231, all of them have been given the courts have been given the jurisdiction. I'll tell you the reason. Even I thought of like this. I think wherever there is a public element involved, whether it's in the interest of the public, they thought it's the courts to decide that, rather than leaving it to any officer in the department to decide this issue. So since NCLT jurisdiction has been conferred after the coming into force of the 2013 Act, where the jurisdiction has been transferred from the court to the NCLT, NCLT has been given the jurisdiction to test the interest of the public and all the stakeholders as a court, rather than giving it to an officer who doesn't function like a court, though he may be passing an order approving a scheme in a small company. That is the reason they brought the distinction between a small companies and a big companies, which has a listed companies or other public limited companies out of the ambit of the regional director for a specific purpose. I think the scrutiny, they wanted it to be left to a judicious person. That is the reason it is still with the courts. That's what I feel.
Okay. Sanjay, what are the key aspects which need to be considered in case of valuation of a scheme of restructuring? Manoj, you can suggest.
Sir, we have to understand any merger, demerger, a merger valuation relating to merger is a relative valuation. So we have to basically consider the potential of the two companies as compared to each other, not on absolute term, because here we need to determine the equity swap ratio or share swap ratio. So that is the main criteria, and hence absolute valuation of the two entities is not done. Separate valuation, different, and SEBI has also prescribed now. We have to test, each valuer has to test the valuation of the under the three approaches, that is the income approach, market approach, and asset approach. And based on that, they have to take a decision what weightage to be given to each of the method for each of the companies involved in the scheme, and then justify those methods. So obviously law has made very clear that it has to be done with diligence. The valuer has to apply diligence and then apply all the three approaches with appropriate weight, and then determine the respective relative value of each other. So that is the method in case of any valuation for M&A. And obviously in case of listed company, there is another test that there will be fairness opinion by a merchant banker, which is basically to look into that the scheme is fair and reasonable to the public shareholders, small shareholders. So all those concerns have been taken care of. Further, there is the audit committee which look into the valuation aspects when listed companies involved. Recently, the law has also changed that independent directors committee would also look into the scheme, and the most critical aspect would be the valuation, and valuation from the standpoint of the public shareholders, small shareholders. So whenever the listed company is involved, a lot of method is already prescribed, a lot of checks and balances already there. In case of closely held companies also, because of the coming of the specific provision of registered valuer under company law, many things are very much regulated and codified. Valuation standards are also coming, so all those aspects would be considered.
Okay. Nagesh, in case of normal merger, whether dispensation of meeting of shareholder is allowed where the consent of 90% more of the shareholder is available?
it is becoming a subjective now. Some courts are dispensing it, some courts are not dispensing it. It's not because there's no uniformity in this, because of the non-mentioning of this fact in the statute, because the statute only talks about the consent of the creditors, 90%. They don't mention about the shareholders. But we've been using the precedents of the high courts in the past, saying that if majority of the shareholders have given their consent, you should give consent. But more or less, I've noticed they are insisting on 100% of the consent of the shareholders rather than 90%.
Okay. Suman, why the companies are that are eligible for fast track merger prefer normal merger over fast track merger?
Sir, can you repeat it again?
Why the companies that are eligible for fast track merger prefer normal merger over fast track merger? In place of going to RD, they are going to Nclt.
Sir, basically, while we are filing the scheme before RD under 233, then if some objection are coming from different regulators like income tax department or any other regulators, then generally RD used to transfer this kind of matter before Nclt, because they are not taking decision on that observation. So they feel, RD feel that yes, Nclt is the better place who will decide the observation of different regulators, other regulators. So, and time is also almost Nclt and RD. Nowadays Nclt is taking longer time, but earlier Nclt and RD both were taking same time. So that's why sometimes.
Hello, do you have any other take on this?
No, I'll add. What I'm trying to say is, the reason is most of the time what is happening is, if you spend some time before the RD and he comes up, so many objections are raised. Again, all these things are tested again before the Nclt. Rather than wasting time before the RD, let's have the process started in the Nclt itself. And once for all, those objections from the RD, OL and the income tax department can be handled at the Nclt in one go. So to save time, people are undertaking this exercise. But now we have noticed, because of the pressure of IBC, since the courts are not taking much time for this M&A, there is a substantial delay. Otherwise, it would have been over. Normally, usually we give a timeline of 5 to 6 months to all the clients, saying that, sir, it will be over in 6 months. Now, this 6 months has unfortunately gone to 9 months. That's the worry. Otherwise, that is the reason, basically reason why they're preferring to go to Nclt, not to the RD.
Okay.
Yes, sir.
Yeah, Ashok, in the recent SOP issued by the Stock Exchange on the scheme of arrangement dated 1st November 2021, it is mentioned then company has to revert to queries of the Stock Exchange within 5 working days from the receipt of queries. However, many times some technical queries consume more time than the prescribed time limit. What will happen if the company could not reply the queries to the Stock Exchange within 5 working days due to any unavoidable reason?
Sir, again, these timelines which we are prescribing and entire discussion based on the how much time is consumed for a scheme to get through. I mean, taking processing on the stock exchange, Nclt, and then actually approval of the process and implementation of the scheme. This timeline which we have prescribed through the notice or circular to the market is a further step in that direction only, that things should move faster. Now, coming back to a specific question, that if you are not able to comply, reply to the query within 5 working days because of technicality involved, it is suggested that you reply to the exchange that we are in the process of compiling the reply, and because of ABCD reasons, I will take 1, 2, 3, 4 days more. It should not be like I will reply. You have to give a timeline, which 2, 3 more days you may be requiring for the, because these are query, everything is already set. 1 or 2 queries are related, so mostly it is related to the same data based on which the entire process has been developed. So it's better to inform the exchange rather than not telling anything and we sending as a reminder.
Okay. Suman, in few cases, wholly owned subsidiary and holding company merger, we have seen that meeting of the shareholders and creditor were dispensed by the Nclt even when no written consent was obtained. Can this be placed in all the similar cases?
So basically, in case of holding and wholly owned subsidiary matter, Nclt, basically Nclt has given the judgment over it that if there is no impact on shareholders and creditors, even NOC is not on record, then they exempt the shareholders of holding company, shareholder and creditors of recently in election judgment, and Nclt has passed this order. So and NCLT earlier, NCLT also has given such kind of judgment. So this can be, it totally depend upon the bench to bench, whether bench will accept this as precedent or not.
Okay.
I can add one more point in this. See, ever since the Sharad Hardware judgment from Allahabad High Court, we've been always insisting that if it's between a wholly owned subsidiary and the holding company, you don't require the consent of the holding company at all. And it's only the subsidiary shareholders who are basically two shareholders. One is the holding company and the nominee of the holding company. If they give the consent, the matter should be, the dispensation will happen. And there is a specific dispensation of the meetings of the shareholders of the holding company. That's clear.
Okay. Manoj, how the company will determine the record date if it is not defined in the scheme?
Record date?
Yeah.
Sir, in case of merger of a unlisted company into listed company, record date, though it is not, even if it is not practically provided, the same can be decided by the board of directors of the company before the listed company, so that they can find out the list of the allottees to whom shares need to be allotted by the listed company. In case of demerger, it is also very important because in case of demerger of listed company, we need to allot share to all the shareholders of listed company, which is large in number. So there need to be a specific provision, but it has to be after any date after the effective date and after giving the notice to stock exchange as per the SEBI norm. So the record date is necessary in that case.
Okay.
But sir, in anyhow, it has to be mentioned in the scheme of arrangement. If we will not mention this defined in the scheme of arrangement, then stock exchange we will insist us to put in our scheme of arrangement.
Okay. Suman, which list of shareholder creditor must be considered for the purpose of sending notice to their respective meeting?
Sir, in case of unlisted company, generally we used to pay for 30 days earlier from the date of filing, or in case of a listed company, when NCLT had used to give us direction to convene the meeting, then latest shareholding pattern, on the basis of latest shareholding pattern, or in creditors, in case of creditors, which we submitted before NCLT in first motion application, we used to send notice to all those creditors because it is already on record of the NCLT.
Okay. Okay. Ashok, whether the listed company can give consideration other than shares to the shareholders of the unlisted company? What is your take on the stock exchange?
Other than shares?
Whether the listed company can give consideration other than shares to the shareholders of unlisted company. Like I'm giving asset in place of shares.
Never seen, sir. Never seen such thing. I don't know what to answer on this point, because other than cash, we have seen preferential allotment, preferential issue for a consideration other than cash. Now, consideration in the scheme of merger, I'm not so sure that whether they can give anything other than equity shares or cash.
Okay, Manoj, you have any view?
Sir, law does not prohibit consideration in the form other than equity shares. If the scheme, let's say in some cases, in past also, in many of the cases when the equity share was not, there was no scope to issue many equity shareholders shares in a listed company, like the shareholding is already near to 75%. So many of the company have issued preference shares in place of equity shares. Earlier, it was convertible instruments which were being issued, but because of the 2018 circular, which says that at the time of filing, on fully diluted basis from public holding should not be less than 25%. This practice has changed. So now maybe non-convertible preference shares or debentures or sometimes cash also can be paid. But we have to see from the income tax standpoint, because there the definition of amalgamation says that the consideration should be in the form of shares. So we have to match. If that is possible, I think SEBI will not object to it because it is not diluting the public shareholding.
Okay. Okay. Whether just running questions, see whether securities premium can be converted to loan through scheme of arrangement.
Security premium to loan.
Huh?
Sir, it would be more or less like buyback of capital by the company. If you are converting into loan, security premium, which is part of the shareholders fund, and you are converting into loan, then it will be paid to the shareholders. So it will be distribution of cash to the shareholders. Yes, through the scheme of arrangement, it is possible. But stock exchange, NCLT might instruct you to follow the buyback rules in case of unlisted company, and in case of listed company, it may be larger problem.
I would like to add here, basically in Geo scheme in 2019, Geo had done same kind of practice, same kind of scheme they have prepared, and it was sanctioned through NCLT, Gujarat bench basically. So they can do so. Scheme of arrangement we can do so.
Okay.
Well, my question is that this loan they will record in whose name? Because securities premium account is a reserve. And when they're converting the loan,
It
they
will
have
be
to record.
proportionate to all the shareholders.
It should
Practically,
be proportionate, yes, of course, because
proportionate
the
to all the
money,
shareholders.
securities premium account is the money of the shareholder.
Yes,
So therefore,
shareholders
you
fund.
converting, yeah. So they're converting, then it should be in the proportion, correct? That is how they have to record. Okay.
Okay. Manoj, kindly clarify on the treatment reserved under the scheme of amalgamation in case of common management and common management.
Sir, in case of common management, if it is a company on which Ind AS is applicable, large size company and listed companies, then the common management has to be dealt with through pooling of interest method, where line by line consolidation would happen. In case of unlisted companies or companies on which Ind AS is not applicable and AS 14 is applicable, there is a flexibility, and the management may decide to apply either the pooling of interest method or purchase method. In case of pooling of interest method, line by line consolidation of assets and liability, including reserves, happen with the amalgamated company. In case of purchase method, only assets and liabilities are taken over and at their fair value, and the difference is adjusted against capital reserve, or it will create goodwill.
Okay, Nagesh, can the appointed date is in the scheme can be futuristic?
I think we've always said that appointed date can be the effective date also, no?
Yeah, that's right.
Yes, it can be. It can be.
Ashok, any view of stock exchange or SEBI when you are making appointed date in the older date, more than 1 year, more than 2 years, or futuristic date? Any call of stock exchange on this?
Right, sir, says that many cases they say the appointed date should be the effective date, which is the date of filing of NCLT order with the ROC, and we don't have any issue with that because that is actually way of giving effect to the scheme. Previous date also we don't have an issue until and unless it should not be 2 years, 3 years back. Then we'll ask question and the rationale and how the things will happen. Because in future date you can prepare everything after the scheme is approved, but 2-3 years back there has to be some rationale. So we'll definitely ask question and then accordingly we will be taking.
Manoj, what is your experience when you have filed something like the older date, older than 1 year, older than 2 years, or the futuristic date? You have faced any problem, or what is the logic behind this?
Sir, generally, the appointed date is the crucial date through which on which all assets and liability deemed to be transferred. So generally, it is kept as the first day of the financial year, maybe last year's or maybe in coming financial year's first day. But sometimes for a specific reason, if there is any change in structure, change in capital of the transferor company, it is not logical to keep the appointed date as the last 1st April of the last year, or maybe in the future year. So sometimes date is changed. MCA has issued a specific circular saying that the appointed date can be up to 1 year back or any future date. If it is more than that, then the scheme must justify that the same, and NCLT if finds it logical, then it will approve. So obviously it is now codified more or less.
Okay. Suman, in case fast track merger under 233, whether application need to be made to all the RDs involved if the company fall under the jurisdiction of different RDs?
Sir, no. Basically, we have to see the jurisdiction of RD on transferee company only. So transferee company has to file the scheme before their relevant RD.
So if my company is in Karnataka, my company is in Punjab, and my transferee company in Delhi, so I have to file in RD Delhi. Yes, right?
Yes, sir. Yes, sir. But, sir, the report of transferor company RD is also be sent to transferee company RD, who will give the final order. So without their report, they will not approve it.
Okay. Ashok, there is one technical problem with corporate space in case of consolidation of group companies. If as on record date 4 to 5% shareholder of the group companies are not traceable, then how we can give them consideration of our flagship company? I'm talking about the listed company point of view.
I think they have to follow same process that they need to follow. They are coming with the bonus issue or some. I mean, it's a common issue related to non-traceable shareholders. So I think there is a process prescribed. Issue maybe they may be holding physical shares or their account is dormant account. So I think the law has prescribed and the same process should follow for the allotment of security pursuant to scheme for non-traceable or untraceable shareholders.
Okay, Ashok, there is a relevant question whether processing fee paid to BSC is allowed as deduction under section 35 DD pursuant to the scheme of amalgamation.
35 DD, Income Tax Act, I'm not expert.
Okay, Manoj.
Yes, sir. All expenses relating to a scheme of arrangement, merger, amalgamation is allowed as expense, which is to be discount basically applied over a period of time of 5 years, basically.
Okay, Manoj, if a company cannot provide you the future projection, if a company cannot provide the future projection, can we ignore the discounted value method for the valuation under amalgamation?
Yes, logically, it is not mandatory that in all the valuation has to happen through DCF methods only. So if the future projections are not available or not being provided, in most of the cases, listed companies does not provide future projections. So in all such cases, comparable company multiple comparable transaction multiples are applied. So that is a very common practice. It is not necessary to apply the DCF.
Suman, can we claim benefit of section 72A during consolidation of group companies in all cases?
Sir, if group companies are engaged in industrial undertaking activity, they are running industrial undertaking, then definitely they will be able to get the benefit of depreciation and losses. If they are not carrying industrial undertaking, then they will not get it.
Nagesh, there is an interesting question. Can related party vote on Nclt convene meeting of shareholders on the scheme of arrangement of listed company with subsidiary company, not wholly owned company, as per LODR? The question arises because scheme are governed separately by SEBI circular and MCA as exempted scheme from section 188 of the Companies Act 2013. So can related party vote on Nclt convene meeting?
Related party?
Yeah.
Related party of whom?
Related party of related party of the company, like so can they vote in the Nclt convene meeting of the shareholder in the scheme of arrangement of listed company? Listed companies listed companies merging with subsidiary company, okay, and they are making some arrangement. So the question is, subsidiary company maybe have some related party entity as per LODR. So can related party vote on Nclt convene meeting? Or
I think ask because I've never come across such the issues before. Just ask Manoj.
As the question itself says that MCA has clarified that the scheme of arrangement would not be considered to be a related party transaction, and so all the shareholders, including related parties, are allowed to vote. Only issue is in case of listed company, if there is a merger of promoter group company, or in any scheme of arrangement where the holding of the promoter group is increasing, then as per the SEBI circular, there will be a separate voting through e-voting process in which promoter group would not be voting, or their vote would not be counted, and the decision would happen by simple majority of the minority shareholders. So that is a specific provision under the SEBI law, not under the company law. Company's law, everyone will vote.
Okay. Manoj, whether it is mandate to transfer all the asset in the scheme at fair value?
No, there is no specific mandate. In case of unlisted company, pooling of interest method can be applied, and there all the assets and liability would be transferred at their carrying book value only.
Okay. Someone, why do we need to submit so many repetitive documents to authority like ROC, RD, and like financials?
Sir, if they have submission, they used to send us 35-point query letter. So if they find any kind of deficiency in that submission, they used to ask, submit this document, submit this document. So we have to follow it. There is no other route, sir. If they're asking, then you have to follow it.
Okay. Manoj, can we claim benefit of Section 72A during consolidation of group companies in all cases?
Right. I think this Suman has already replied. So 72A of the Income Tax Act specifically says that certain class of companies, in case of amalgamation or demerger of certain class of companies, the losses or depreciation, unabsorbed depreciation may be carried. So these are mainly the industrial undertaking and certain infrastructure project companies which are allowed, or in case of PSUs, they are allowed. So for all such kind of companies, it is allowed, whether or not within the group entities. In all other cases which are not industrial undertaking or infrastructure companies or government companies, this 72A benefit would not be available.
Acha, what is the time limit for an applicant company under the scheme of restructuring to revise the return from the post the transaction?
There is no specific requirement on law with respect to revision of income tax returns. So the general law would apply, and up to one financial year, end of the next financial year, revision may be done. So that is a possibility in normal circumstances. In specific circumstances, revision may be made by the company as per the normal circumstances. There is no specific law for merger amalgamation cases.
Okay, kindly clarify the recent amendment in definition of demerger under the Income Tax Act with respect to disinvestment.
So for PSUs, the government is doing a lot of disinvestment processes. To simplify those disinvestment processes, the definition of demerger is expanded, and here the conditions of demerger as prescribed under the Income Tax Act would not be applied. So basically the difference is that even if it is not fulfilling the definition of an undertaking which is being demerged, demerger can happen. So demerger of the benefits of demerger can be availed by the PSUs. It is applicable only to the PSUs.
Okay. Someone, can mere losses of revenue of group company be ground for objection to a scheme by the IT department?
Sir, it is already been clarified by National Company Law Appellate Tribunal in Geo case. Basically, in this case, income tax has objected the scheme of arrangement before Nclt. Nclt has already sanctioned the scheme of arrangement. So Nclt has already clarified that mere only that there will be revenue loss to the government, you can't object the scheme of arrangement. And
Okay.
Nclt passed on.
Nagesh, you must have appeared in so many cases. Can MAT credit be transferred to the transferee company through the scheme? There is no specific law in this. Have you come across?
No, let me tell you, scheme is like the constitution. Anything and everything, if you think that can be transferred, which will be mentioned, even if it's not mentioned in the scheme, if you are trying to take any benefit by virtue of a transfer, credit or not, subject to whatever cannot be transferred is mentioned. But if it can be transferred, we can take credit. But strictly speaking, I've yet to come across any case where the MAT credit is transferred to the transferee company. I have not come across. Maybe Suman can answer.
Manoj, anybody?
Yes, sir, it is allowed. There are cases in which MAT credit has been allowed to transferee company.
Okay.
Yeah, Suman must have come across. Yes.
Yes.
Nagesh, whether cancellation, conversion of preference share before through scheme of arrangement will amount to capital reduction under Section 66?
Reduction, no? But then even if it is reduced, in a scheme of arrangement, you can always say that it is arising under the scheme, isn't it?
Yeah.
So even if it is reduced, what I'm trying to say is that we can say that I need not follow the process under the reduction, no? By nature of the scheme. Cancellation arising.
Nagesh,
We have cases where we said cancellation does not amount to reduction. No,
yeah, yes.
correct.
Manoj, any point?
No, sir. As part of the scheme, it can happen, and there is no need to
Correct.
have separately follow the process of reduction of capital.
Okay. Someone can transfer the company file its return after due date which got delayed due to pendency of scheme of amalgamation before Nclt.
Is already decided in Dalmia Power case by Supreme Court in 2019. Then if there is a scheme is pending before Nclt since long, and after sanctioning the scheme of arrangement, if transferring company is filing revised return, then they may do so. Revenue Income Tax Department can't deny it on this fact that yes, the time has been passed, so they can't object.
Nagesh, can Income Tax Department object the scheme on ground of tax avoidance and loss of revenue to the government?
That has been answered. I don't think so. They can object because see, in a scheme, tax avoidance has always been held not against the law. You can have a scheme which, in the process of which you can avoid a tax, but it is not illegal. So therefore, through a scheme, you can go ahead. There's a recent Nclt judgment also.
Okay. Manoj, whether the share received in consideration of sale of an undertaking by the company can be considered as a slump sale?
Share issued under the consideration of slump sale.
Whether the share received in consideration of sale of an undertaking by the company can be considered as slump sale?
Yes, the definition of slump sale has been expanded under the Income Tax Act. So all kind of scheme, slump exchange or slump sale are covered there. So obviously shares can be issued in place of cash, and that is also covered as a slump sale.
Okay. Nagesh, as per Competition Act, for calculating a threshold limit, the asset and turnover of which entity is to be undertaken? Transferee or transferor or both?
Both.
Okay. Manoj, in case of after consolidation of ground companies, the limit given under CCI has been breached, then approval is required, or is there any exemption provided under CCI guideline?
Only exemption I think is available with respect to within the group consolidation. If it is not within the group, then obviously approval would be required if the threshold is getting met.
Okay. Nagesh, can a company utilize the general reserve to set off the accumulated losses?
See, this is more of a. Please ask Manoj this question.
Manoj, can company utilize
it is internal reorganization. It is a regrouping within the shareholders fund. So obviously, if it will be deemed to be a part of reduction of capital only, and should be approved by Nclt.
Ashok, the recently SEBI has, I think 2 years back, they came out with the when you are issuing shares to the convertible instrument to the company, then they are calculating the convertible instrument as a part of the equity. Say example, I'm merging two companies, and the other company is I'm issuing share, but I can't go beyond 75. So I'm keeping it 75 and remaining I'm issuing convertible instrument. And when the conversion will come, I will maintain both the companies 75 and 25. So why the SEBI is insisting that at the time of issuing shares, you have to calculate conversion value also.
So the question is why SEBI is insisting on compliance with this requirement of 25% to be held by public shareholder on fully diluted basis.
Yeah.
When I can ensure that when I'm converting these convertible securities, before that maybe promoter will dilute some stake and post conversion still I will remain compliance. As of now, I don't have that room. So up to the room that I have, I will issue equity shares. For the balance, I will issue convertible securities. And thereafter, before converting those convertible securities which are issued under the scheme, the promoter will dilute, they can dilute in the market, whatever means. And then only I will convert, and I am writing in a scheme so that it is becoming the part of the Nclt approved scheme. Then what is the issue? That is the question, correct, sir?
Yeah.
So this question was actually, this issue was, this is based on, of course, certain experience when the companies were not able to dilute because of ABCD reason, market going down, something happening, and the conversion period was approaching, and they have converted the instrument, convertible preference share or convertible debenture, whatever issued pursuant to the scheme, and this eventually ended up company being MPS non-compliant. So this is towards that, again, same principle of protecting the interest of the public shareholder of the listed company through a scheme, ensuring that you may reduce public shareholders' stake from, say, as much as they may be holding 60%, 70%, depending on the shareholding pattern, but it cannot go down 25%. So that was the objective. So now, therefore, it is the law that we have to check. Actually, we as an exchange have to check. And this is therefore a precondition that we have uploaded along with our checklist, that companies has to check that on a fully diluted basis, it has to be compliant with. So that route was earlier available, like Manoj was saying, but now it is not available.
Sir, you are mute.
By doing this, Indian companies are at a loss. They are not competitive as compared to international, because you can't get fund also for acquisition. You can't do this also. So the bigger company, suppose you want to acquire some company and you don't have fund, you want to issue shares, you can't do this.
So actually, this is a matter of debate. I mean, because what happened if the company which is amalgamating, of course, we are talking about unlisted company amalgamating, and therefore this situation getting a right is that the bigger number of shares are issued. The idea is that if that company is that much big, then better that the company come through IPO and get listed through the proper channel, rather than merging with the listed company and the shareholder of unlisted company coming in the domain of the listed company, and then actually the capital of the listed company is going is very less as compared to the shares that are getting issued pursuant to scheme, like very big corporate merging with the listed company, and getting the status of listing by shares being issued, and then this being taken care of, that over the period of 3 years or whatever time for the conversion has been provided, I will be keep diluting and getting convertible security convertible. The idea is that rather than doing this, I better come through the proper channel of listing. I mean that is something which is discouraged through this process.
Okay, Manoj, how terminal value is calculated in DCF method?
DCF value, at the time of determining the DCF, we have to determine the terminal value, which form a major part of the valuation. So for that, there are Gordon methods and other methods prescribed, and which determine what will be the terminal rate of growth. So terminal growth rate is determined, and it is discounted as per the WACC of the company, that is weighted average cost of capital. So depending upon the company, terminal rate of growth is determined, which may be 2%, 5%, up to 5% generally, at which the company will grow in infinity, and then that value is discounted to the present value.
Okay.
So there are methods prescribed which is used to determine.
Okay, friends. Now this is a rapid round, so I have to ask fast. You have to give immediate answer because time is less, and I have a more question. So one, whether GST will affect on the transfer of asset pursuant to scheme of arrangement of merger and demerger?
No, sir. No, there will be no implication.
Nagesh, whether sectoral regulator approval required before the filing of scheme of NCLT?
Before, no.
Achha, whether a scheme of amalgamation and arrangement which had been approved by NCLT but rejected by NCLT can be modified?
Rejected by NCLT can be modified by NCLT.
NCLT has approved but rejected by NCLT because of some objection somebody has filed, can be modified. And like I got an approval from NCLT, but some shareholder or somebody has made a complaint, so it has gone to NCLT, and NCLT has rejected that scheme. So I can modify and file it again?
You will have to go through the process all over again. You will have to have the scheme approved by the modified scheme approved by the board of directors, shareholders, then come to the NCLT.
So it means it's your pure the fresh application.
Yes, it is set aside because the scheme which has been approved by the NCLT has been set aside.
Okay, so when if the transfer company and transferee company having registered office in different ROC jurisdiction, then where stamp duty will be paid?
The stamp duty will be paid at both places, sir. there may be the provision of set off, but stamp duty will be attacked at both places.
Okay, Manoj, in fast track merger under section 233, shareholders can submit their NOC for dispensing purpose or not?
No, the law specifically asks for the approval in the meeting of the shareholder.
Okay, Nagesh, whether under demerger assets can be transferred on fair value from the books of demerged company to resultant company?
No, please ask all these questions
No,
to
I
me.
think,
Okay.
I think income tax clearly says that in case of demerger, all assets and liability need to be transferred at their carrying book value in the transferring demerged entity.
Okay,
So
Ashok, is valuation necessary if replica shareholding of demerged company will be created in resulting company?
No, as per circular, no, if mirror image is created.
Okay. Is fairness opinion and valuation report mandatory in case of reduction of share capital of listed companies, Suman?
Sir, Ashok sir can tell us better.
Yeah,
Basically,
actually, there's no dispensation is provided in the SEBI circular. We are talking to SEBI on this point on the capital reduction part.
Okay.
but sir, we have to submit. We have to submit fairness of
Because no
at
dispensation is
present,
provided.
no specific provision is there, so they are asking for.
Okay. Manoj, is it mandatory to fulfill the condition of amalgamation and demerger as defined under section 2(1)(b) and section 219(a) of Income Tax Act respectively for effectiveness of merger amalgamation?
So merger no sir, income tax definitions are for tax purposes. If you want to seek exemption under section 47 of the income tax, definition need to be fulfilled. Otherwise, scheme of arrangement can be approved by Nclt irrespective of the fulfillment of the definition of income tax.
Okay. Suman, as per Companies Act, for calculating the threshold limit, the asset and turnover of which entity is to be taken, transferee or transfer on both? I think
Can you
this we have asked. Somebody has asked this question. Okay.
Yes.
Manoj, further, if the license is sold by the transferee company, the treatment of the deficit will be same as would have been in the case of amalgamating company.
Could not understood the question, sir.
Whether expenditure on acquisition on license by transferor company not yet written off will be allowed to the transferee company?
Yes, it will be. All assets and liability would get transferred.
Okay. Where such license is sold by the transferee company, the treatment of the deficiency surplus will be same as would have been in the case of amalgamating company?
Yes, it will.
It will remain same.
Okay. Now, I think I have asked more than 70 questions from all the learned speakers, and whatever question we have received today and whatever question we have received till 12 o'clock, we have tried to consolidate. In case any question is unanswered, friend, you can write to us. So on behalf of corporate professional and on behalf of all participants, I thank all my learned speaker, Mr. P. Nagesh, Senior Advocate, Mr. Ashok Singh from Bombay Stock Exchange, Mr. Sanjay Mal, Manoj and Suman. And you have given, but as a tradition we are doing, I'm giving 1 minute to each speaker. What is your take on if the M&A regime should go fast with the regulatory help? So what is your view? I will start with Ashok. What you think that what is the best way to do work on the corporate side as well as the side of the regulator?
From regulator side, we are already talking and giving our feedback based on the representation that we receive from corporate. So they should rest assured that we are talking on their behalf for the making process more smooth from the SEBI and Stock Exchange perspective for the processing of the scheme and giving approval. From the corporate side, my view is that they like we have seen valuation not being though the methods has been prescribed by SEBI, but they have to give justification. Even then they are using those methods, but the valuation on the face of it is looking very not very good. And valuation standard being coming in line, I get that things that to be plugged in. Apart from that, circular requirement till those things are changes have to be kept in mind while framing the scheme, rather than saying that I'm proposing this, you give me exemption. That will expedite the process.
Okay, Nagesh.
See, from the practical point of view, I would rather suggest that the court should believe the companies when they're coming with the first motion, like a checklist. They should accept everything in one go, and immediately, in my opinion, they should immediately say within a week you move the second motion, and so that we can issue notice to the regulators, so that the time period in obtaining the permission from the statutory authorities is reduced a lot, and we can complete the process within a period of 3 months. That's my aim, ultimate aim. We should be over in 3 months' time.
Okay, Manoj.
I think a regulator is continuously evolving, changing the scenario, as Ashokji was telling, that many of the companies are still not fulfilling the conditions. So that part need to be changed by the corporate side. But obviously, regulator side has to also do something. Like NCLT timeline is very long. Then there are certain pre-clearances are required, like in case of stock exchange listed company pre-clearance, which takes 3 months time. So timeline gets extended. Similarly, other regulators like RBI also sometimes asking for pre-clearance. So those things, as per the company law, it is clearly provided that all the regulator will get notice during the process of NCLT only. So if all the regulators come together and decide that all the approvals should come at one go, the timeline can be reduced and M&A can be fast-tracked. So that should be the approach, I think.
Okay, somebody has sent, it is not a question, just to congratulate and thank you for the organizing such a wonderful program, and all the speakers have given valuable inputs, and it is a pleasure always to attend the program organized by CP. Thank you very much. And one person has, I wish all a happy, prosperous new financial year to all 2023. So thank you very much, Mr. Ravi. Suman, last your point.
Sir, I totally agree with Nagesh, sir, but I would like to add one more thing here, that timely submission of reply of queries of regulators. And if regulators will be submitted their report within a stipulated timeline, then definitely the process will be faster.
Okay. So thank you very much, all my friends. My suggestion to the regulator, whatever we have received today, we will send it to regulator. And regulator is still always asking how to strengthen the M&A transaction is not only always tax avoidance, M&A transaction to bring more synergy and to remove the unviable product or unviable entity from the system. So this is one area where we should encourage. That's why the funding is not available to Indian companies. That is a big loss to Indian companies. That should allow, number one. Number two, the point which I have talked to Ashok relating to the convertible instrument calculating in advance, that is also a loss to the Indian companies. And overall, the timeline which is there, because M&A transaction over IBC, I have seen IBC's taken preference than M&A transaction, and they should have a separate dedicated court where they should do M&A, and simultaneously there should be training to the judges also, that they should understand, because this is a very complicated subject. So they can understand and they can realize what is happening. So with these things, friend, I hope that this program could have been used for the benefit of all the people, those who have attended. Thank you very much, all my learned speakers. Thank you very much, all my participants. As we are doing this exercise, our next webinar on 8th is on a different theme. Now from this new month, new year, from April month, we are starting every month one topic on Q&A. So all the issues of corporate world we will take up. So whatever new thing is coming, we will take up. So 3 topics or 4 topics we will have on the topical things, and one dedicated program every month on Q&A of whatever new law has come related to corporate law we want to discuss. So friends, come in, you can send your queries. So we have a Q&A session. Sanjay, you were not there, so I was asking everybody that what is your take on and what is your suggestion in 1 minute. Can you explain?
No, I think a lot of things have been streamlined. There are checklists and other things, but at the same point in time, while corporates have been asked to follow the TAT and the SLA, the timelines for regulators should also be there so that they do things in the when queries have been answered well in time, and the process should be reduced. NCLT, of course, I think Nagesh would be the best person to say whatever it is. But I think from regulators' perspective, till SEBI, it should be done as swiftly as possible, as long as it is a simple scheme.
Thank you very much, Sanjay. So thanks, friends. See you on 8th. I will be attending that webinar from Dublin. So bear with me. Thank you very much to all. Thank you. And happy new financial year for all the professional and all the corporate people